Hello, hello. Good morning. Good morning. Welcome to another EU ES Futures trading stream. Today is Tuesday. It is September 16th. It is 9:10, almost 9:10 a.m. Eastern time in the US. We're about still like 20 minutes to open to the open. And we got something here. Something I would say weird is the I don't know if that's the best word I can choose, but certainly I believe is the closest one. What I see here, or what I got here in this market, what I'm seeing in this market is tremendous risk in this market. There is a lot. I titled this stream the rollover week gains. Okay? It is particularly special. I don't remember. Actually, I don't remember really when was the last time that the rollover week or the FOMC fall um, in the rollover week. Right? It could be. I mean, the odds that happen are high, right? Are not low, right? But what I am seeing now is something that I don't remember seeing before. That's central for that's the central or that's the theme for this stream. What is that? It is. Let's see if I can show you here. Okay, I'm going to take a screenshot to talk really quick about this. I don't know if this is something. This is a record I have. I do this. I don't know if you do this as well, but this is what these numbers here. I got those numbers from CME, right? Those are official numbers from CME. Send me that group, and you either because I do the ES the S&P. This is the website, and I got here the contracts. This is this contract is this one that is expiring September. December is the new one that is taking over, and then come March, and look at these volumes. Right? These volumes here. This is what I record during the rollover week. Yeah? And this number here is the total that are negotiated in any given trading day. All right? And this is the sum of all of these contracts here, all the contracts that we have here. The estimate volume, if you add this to this to this to all of them, notice how in the future, June next year has really few contracts here. And this is the estimate, the added total. And each one has his one. Now, that's how I got that number. You can do the math here by yourself. And those numbers are these ones. This is the estimate total. The one here. I guess I'm going to change that. I'm going to use something bigger. This one here. And these ones, actually, this is just for intraday reference, right? This is settle. This is last. What I have current here is September contract. Okay, and the numbers that I have here right? This I got from Sierra. And what is that, right? That's the volume, right? That's the volume that I have intraday here. For example, the current overnight session, I'm going to magnify this. The current overnight session has 148,000 and something, right? Contracts total. Yesterday we have 576 and so on, right? We have a previous overnight and you can keep going backwards. And that's what this one is. Down here, just during the rollover week, that's when I do this, and this is December already. Notice how this starts to increase, right? From 5,000, overnight. This is overnight. This is regular trading hours here. Yeah. 5,000, 17,000, 30,000, almost 90. We have 600,000. Let's just take one day, right? One day. Over here, let's take yesterday. On both contracts. Now that you know what these numbers are, I'm going to erase this. This is the total that comes from the official CME official website. This is the total that I have from Sierra for September, and the total here for December is 600, maybe 740K. I don't that much. Okay. And now add this number to this one to 400. How much you have? 1.1 million. And let's round it up with 1.2. Okay, 1.2. That's total. And now check this number and compare with the official website. I got 1.2 that my charts record. Right? 1.2 million. But the official website is showing 3. Let's round it up this to 2.2. 3.2 millions. What's the difference between this? What's happening here? Where these 2 millions are, or where they go? Okay. Do you think that website? Do you think the CME has missed this? Do you think the Sierra has missed this? No, right? What happened is there's a lot of private exchange in which these are negotiated. Those ones are negotiated between hedge funds or offices or whatever, right? And those are called dark pools. And there's a lot of things that are going on here. These 2 millions that are, quote unquote, lost, because they are not lost. Somebody is doing something with that. And that puts a layer of that's a piece of information, a significant piece of information that is missing here. Right? On top of the usual or the assumed uncertainty that we have to deal with, now we have something else going on here that I have no idea what it is. Really, have no idea how that has been dealt with and what happened there. Right? But those contracts, which is almost twice what the public exchanges are registering, those ones are not here. Nobody can see, but I cannot see. I'm pretty sure, you can see either. And what's that, right? What I am going to do with that? I cannot do anything with that. But I know there is something going on there, and I have no idea what it is. So if my approach to the market is trying to figure out what is going on, right? That's my main, that's the first part of the trading, or my plan, right? Figuring out what's going on, be an observer, go along with the market, try to be the market, try to get in the flow of the market. And that's the first part of the business. The second part is you start to build a plan, right? What do I do? Where I go? If I found what I can believe is an opportunity, right? When then the odds of having a successful trade increases, I can get close to that, or I can see that building up, right? The next part is the execution, followed by the monitoring the trade, which is the performance part, right? Then comes the reset, and we start all over again. The first part, I don't have the first part here, because the most part of the business, most part of the information that I got from these screens is missing. Just plain and simple. I mean, what else can I say here? It's just missing. And my observations remain the same. I can keep seeing, for example, that I got right now, for example, I got this area right in the overnight. Wow, this is very questionable. Look at how many lows are here. 1, 2, 3, 4, 5, 6, 7. The odds. And right now the market is opening, or is supposed to open up here in this area, right? Now, the odds that the odds that this gap is going to hold today, as I see, are very low for me. My observations, I keep watching the market the same way, but I don't have that missing piece. That's a big part of the business. So what I do now is, that's the question, right? What do I do? Do I want to be part of this? And that's a big decision from my point of view, all right, that I need to take. In the same way how I can, if this were another set of circumstances, I probably would have been making my mind, okay, this looks like an upside day, very questionable upside day, coming from coming from a day like this. We have yesterday this very questionable low as well. Now we have the same thing up here, where it is. Let me put that ellipse here again. This area, right? There's a bunch of stops here, right? I have this from yesterday. This wasn't corrected. This overnight wasn't corrected. That is very questionable here. Same thing. And yesterday, this low is very questionable, right? It's just the market just closed the gap and held, and then followed, and look what we had. What the market had before that happened, right? Very questionable high, and close with a late spike in the overnight. This spike, this rally, has a questionable base here. In a market that's going higher, the all-time frames I line up to the upside, right? We have this. So what do I do? And before and this is the thing about trading, right? We got to be with it. We got to get to with the flow of the market. We have talked about the two trades that the market, at least from my point of view, from my time frame, that's what I saw, right? There was one trade last week that was based on the breakout of the inside bar, and one trade the week before based on another inside bar, but the main thing for me was the 45-degree line, right? And even though I can maybe see some things here, that piece of information that's very important, which I consider is a very important piece of information that's missing, more than 50% of the volume is missing here. That is what's, based on that piece of information, I decide, my bad, before having that last week, I talk about deciding not to be part of, that the odds that I'm not going to be part of this market were really high during this week. And when I see these things that are going on, I say to myself, you know what? Let's stick to that. I may see some things, but on the market, maybe I may place a mental trade, and the market may work right on as you plan, mentally plan. But I am in peace with that. That's my plan. Stay out, watch what happens, and learn from that, right? As I say, when I open this stream, I don't remember seeing these kind of things before. There is usually something that is missing. Can be, it was, if you go back, if you have a record just like this, and go back in time, you will see, right? That I guess the most I have seen was 400, 500,000, something like that. You can just keep going. It's 22, 21. Since 21 I don't remember seeing something like that. Something missing in that proportion. And there are 2 days now, right? That same thing that happened yesterday, it happened Friday as well. If I remember well, I saw these kind of things. Usually, it could be either Monday or Friday, one of those days, and then it comes back to pair. It can be missing something, but not that much. Maybe 100,000, 200,000, something like that. But the amount that has been allocated through dark pools is just impressive here. Really, really extraordinary. So there's a lot of things that are going on here that I don't understand. I don't have an appreciation of what's going on. So I just decide, you know what? Let's just let the market deal with whatever is dealing with, and be an observer and learn from this from the future. I don't know when this information can become useful. I don't know if it will be useful, but that's the plan. Or at least that's the plan for me. And when you have a plan, it comes with a process. It is part of the process. The process is the same. It repeats over and over. Now, the plan may be different, but the process is the same. And that's what I'm doing here. I come out with a plan, and remember, being short, being long, and being flat are the options here. It is up to me to decide. Right? All right. I'm going to put a period here and close those thoughts and move on. Right? Those are I have get out of those thoughts. Those ones are out. Let's keep observing the market. one of the things that I have observed, and this is I something that I'm seeing again after a long period of time. Again, I guess it's more than a year that I'm seeing this again. Is these huge blocks that are coming? These marks here, you can see here, you can see here. These are the same, you know, because this chart are linked to this one. This is my main chart, you know, and from here I got the periods, the histograms of each period. This one includes the overnight, right? This is bid and ask. I don't care much, but I do pay attention to this one, which is the amount of contracts, the volume, big blocks, right? What I call big blocks. And what you see here is this one. This is the closing. Notice the amount of contracts that are negotiated here. This at once, you know, almost 6,000 or 7,000 contracts that are boom. You know, there are no ones, there are no tens, there are no hundreds. These are in thousands. That's what these ones are. I haven't seen that. And when now, from 1 year ago or more, what happened here is this usually becomes I say usually, yeah? That's a bias as well. These ones become support, may become support resistance. This is what happened from yesterday, from the previous day. This 1.6 is from Friday. I have recorded that, and that one was on Friday. No, my bad. It was from yesterday, yeah, from the opening. Yeah, and the market used that area was as some sort of support. You can see B holding there, G holding there, you know, and then back and forth through that, right? And then again, the bigger blocks come after that, after all this back and forth, you know, they're moving higher. Another situation that happened yesterday, this is value. I guess it was when A, B, C was, or G, I don't remember exactly. I guess half of the day went through. And notice what happened, right? Value, actually, it moved lower, right? So there is some selling that's going on here. There's some subtle selling that's going on here. Value, of course, is higher, right? After G, after AFG happened, the value was going to move lower, but very low. There has to happen. There has to be a big break for that to happen, you know. But it moved lower, so there is something here. Right? Now, for today, gap close. This 600,000 is the first day. I do this to highlight how much volume I have here, right? And what is that? Why I put that? If I go here and check Friday, you know, 600,000 here. You know, because this is December. These charts belong to September. And what do you have on Monday? Look at that, 1.7 million. So pretty much Monday and Friday are the days in which this contract started basically to trade. Friday, 9, what was that? 9, 16, 15, 14, 9, 12, right? 9, 12. Well, this is an important note. So why I do this? Because this is, I am a short time frame trader, and And what I do has a lot to do with inventories. Inventory getting too short, too long. Below this day, there's nothing below that. Okay, there's nothing below that. There's no inventory basically. Notice these lows here, right? 1, 2, 3, 4, 5. While these have excess, there is a significant amount of stops that you will find below here. Okay, the same thing happening from the overlay. I think this is I would leave this day alone. All right, and now the main thing from yesterday we were talking about this, right? That I mean, from the overlay, not from yesterday, from the overlay, the odds that this gap was going to hold, or the odds that this gap was going to be closed were high, right? How I can use this under normal circumstances, right? So if I had a mindset, if I see something to the upside, because the market is going higher, so the risk is high. The risk of having a long position is high here. Notice these overnights, for example, how much volume I can see here in these levels, right? This is significant. 3,000, 4,000, 2,000. That's a lot of volume for an overnight. And look at here, thousands. That's a lot of volume for a regular. Usually, no? Overnight are just like this. 600 is really high, but the higher usually has to be 300, 400, something like that. But we are not having that. But also, again, this is the rollover week. There's a lot of games that are going on. I don't know what's going on exactly. Nobody knows except the ones who are positioning to sell for something here, and I don't know that. But I can see the trade being, or the trading days being dominated by short-term trading, and if I can see that I am just a regular guy, a small retail trader that's trading by himself from his house, come on, man. Other people, more sophisticated traders, can see that thing as well. Guys or people with way more capital, right, can see that as well. I didn't even see my bar charts, really. I just remember I had like what's happening. For example, I have this is the ES. Let's check. Look at this. If this one gets back inside, the gap has been closed. Watch out. We can check this low here. That's the next thing. What's happening in Nasdaq? Nasdaq also it is about to get inside. Russell is an inside day. It's about to check. It's trying to check the opposite side. The Dow is an inside day. So these indices are not in sync. When that happens, the odds of rotation also increases here. And this is as simple as that. Let's check, for example, the ES, and check this thing. Notice how big these ranges are relative to the ones before. Really wide ranges, and this is very compacting up here. Nasdaq was was the one that has higher odds of making a new all-time highs. Have a gap here. Let's see Nasdaq have an upside acceleration here. Or upside continuation. Russell, this may be a play actually. I think Russell also has the opportunity now to make an all-time high. And as you can see, the Dow also is doing the same. It doesn't have a upside this thing that happened, right? Market making new highs when there is an acceleration that happened afterwards, and we have excess. I don't think that happened. That has happened yet here. It's very questionable what I can see below here. Very, I would say, laggards here. The ES is the one that looks like potentially has the better odds to have excess already here. But I'm not saying nothing. I'm not saying that this market is going to break and nothing like that. Market is coming back inside this to the range. Once it gets back, watch out. This opposite that can be the potential destination. There's a dissonance here in the bonds. Gold making all-time highs. I don't like this one. The dollar is breaking here to the downside. It's a breakout to the downside. Crude oil remains in range. Boy, these options, man, 6664 are 50 points. God damn. Can you do something here? The market's counting on a break here. $50, 66.50. Let's check. I'm checking. $66.50. 10 points. No, man, 10 points is just too much here. This is what I'm going to check. These are the options, but again, they are spying today. Hell no, I'm not going to negotiate nothing with 0-day expiration here. And check these ones. What I remember, when the market re-enters a day, the odds are the market can reach the potential or the ultimate destination. Here is the opposite side of the range. We have an all-time high that has been made during the overnight session. Remember, in my case, my plan, right? What my plan is, I'm not calling anything here. Okay? But if the market comes down here, I'm not going to be part of that because that is part of my plan already. Hey, Nider, No man, thank you, but no thank you. Now, from yesterday, oh, come on, man. I didn't mean to erase that. I wanna. Okay, let's close this. No. Let's open again. Alright. Remember, this low is the potential destination this day. And notice how this is playing, right? From yesterday, the market just did enough to repair this laggard, this question of selling. Come on, man. As a matter of fact, I am going to leave. I have to leave this too. Okay, and I'm going to leave this area. We got 1, 2, 3, 4, 5. Okay, what I have here, this high here, is the same. Do you remember what we put down here? What it was? What it was? I remember doing something here. What it was? Where it is? What it is? What it is? Okay, this it was this, right? Because we have 1, 2, 3, 4, 5, 6, 7, 8. This is it. Yeah, yes, sir. This is ellipse. This is very questionable, huh? This one is very, I remember, if I can see this, okay, if I can see this, more sophisticated traders can see that as well, right? And the thing is, when I got these charts here, another thing that happened is I have two contracts here. I have, and the correction actually may happen in this one, right, which is September. Right? This can be the one that can be going and being under correction now. But because we have the two, one has the tendency to drag the other one. How much volume, for example, is the overnight reporting here? 160,000. September, how much it has 60,000. We have twice the volume. Currently, September, the opening has 20,000. And this one has already 80,000 here, right? Can you see the pressure here? What's going on here? They're just pushing this low, but I don't believe, right? From my past observations, this kind of support area, you can see there's nothing here, right? In any regular, any normal chart, will not have this kind of references. You may see POC here. POC can be up here to here. That can be something, but today it has these levels here from yesterday that are reinforcing the relevance of POC. So when tomorrow, quote unquote tomorrow, it can be any other day, we have the same thing. If short-term traders try to do the same thing, yesterday it held, right? Because POC was there, it was wide, it had a chance to be up here as well as down here. Let's do the same. It doesn't have, you don't see what is going on behind, and you don't have this support, right? This one here, that is holding, adding to POC. Now, we have talked about how low, how high the odds were that this market was going, that this gap was not going to hold. It didn't hold, the gap has been closed, and now the market is targeting the opposite side of yesterday's range. Remember what happened yesterday as well, right? Remember what happened, that value was higher all day long was higher. But under the surface, there was some selling going on there, because value was moving lower. Okay? These are just observations. I'm not doing anything here. The plan, I am sticking to a plan here. Also, most of the overnight inventory was long. You can see settle. We can see settle is down here. This is settle, and the chunk of the volume from the overnight. You can see this is value area, volume POC, or whatever is up here as well. There was a lot of stops down here. But these options, man, are just so expensive. Let's check today's. Look at that. 65. How much are these 65 now? And this is the thing. This puts expiring today at 1 point. It's 0.85. This is just making no sense, right? Oh. If you missed the rally yesterday, you may be thinking, "Gosh, I'm not going to miss the rally today." And that kind of thinking is just crushing trades now. Russell is way below yesterday's low. The Dow is now inside the gap. Here's the gap. Now this area was yesterday's support as well, where the market is right now. It seems to me that the market is heading towards this. This is the ultimate destination here. This could be a good area to take profits. If there's a spike here, we got this area here, down here. And that's it, man. This area here. That area. It's a lot of whites here. This is the thing, right? This really itches. I want to be short. God damn, I wish I could have been short, but remember, that's part of the plan. I am not going to say that I can block my emotions. My emotions are there, right? I rather embrace them. I'm feeling the urge here, and accept that. That's part of the business, man. That's part of the business. The market wants you to fall. to fail to yourself. You got a plan. The market wants you to, ignore your plan. The market needs you to fail. Have you seen? Now, there is many ways to see the market. If you have read or watch Mark Douglas, for example, Mark Douglas has an approach. He was a trader, and he has a book. What's the name of his book? What's the name of his book? Come on, man. Mark Douglas book. Very popular. Trading in the Zone. His point of view is one of the house. If you get a casino, for example, you got players and you got the house, and I am taking. Just give me a second, please. Uh-oh. Wait a minute. Wait a minute. I'm taking this from Stephen Goldstein's book, right? Mastering the Mental Game of Trading. He's a coach also. I don't know if you are interested in this market. This is the area. If I got anything, this is the. Getting close to this area here. Anywhere close to this area, that's a profit, or hedge, or do something here. And what happened is many times, we want to get the last ticket. This market is going to come all the way to 66, 50, right? That's what I want. I don't want to miss that, right? Many times, trying to squeeze the last tick is what get us here. It has, if there is downside to what we are seeing now, this still can be a counteraction to the overnight inventory here, right? That still can be that. Notice there is still inside value area from yesterday. Below this, we have this 2-day range. This is actually very, very questionable because the shape, this had to look like short covering. Coyotes are short covering. If you check, remember what I say, right? This is September. This is where the most volume are in this market. We may not be necessarily trading December here, but we have September. And remember, this is a lot of inventory that is in the long side. What do you have tomorrow? We have FOMC tomorrow. Everybody's betting. Quote unquote everybody, right? Take that with a grain of salt. Most traders, short-term traders, are betting that the Fed is going to cut rates tomorrow. They want to be, I don't want to miss that. I'm going to be long, ready to cash when this market hits the moon. Right? That's the mindset. Look at what happened here. All right. What happened here? This Like this very question of selling was just crushed yesterday, the day, subsequent day, right? The weakness below this 2-day range. Where is coming from sale, you know? And it's very hard also to have these two charts. Most traders don't have this, right? Much less the volume at any given level, much more. I mean, and much less, two or and both of them. Okay, let's see if we have a day like this today, which will be a liquidation date. Aim it to this inventory here, the accumulation here, because this break here remove these laggard longs, no, but the inventory remains weak, no, because of this day. And also the yesterday's low is pretty much 6,600. These dots here at the opening. Oh, let me save this. I don't want to lose these things now. What? Oh, come on, man. My bad. That was no C. This is it. Save us. C. Alright, now you. Save us. You. Yeah. My bad. Yeah. Nasdaq, man. Watch out, Nasdaq, man. While the ES has reached the opposite side of the value, this is, I am saying this because this is, it looks like short-term trading. Nasdaq hasn't reached that area yet. Once one market start to move, and now all the markets are in sync now. All are going lower. With the ES with good chance to reach the opposite side, very close to reach the opposite side of the previous day range. Nasdaq is just getting into the range, but Nasdaq as well know that it can move really fast as well. The main thing is here, who wants to go or to face FOMC long? Okay, I think that has something to do with what we're seeing right now. Okay, now let's check this out. Look at this. You have L and M from yesterday. Now B is adding to this. Okay? Same thing that happened yesterday, the day before. What is this? Friday, right? You got A, B, E, F, M adding to D, G, H. From Friday and Thursday. This is not good for the risk in the loan. We were talking about when the market was up here, right? The risk in the loan side is really high. You know, this in the market that's going high, being long was extremely risky. That's the thing, right? How do you wrap your mind around that? Those facts, right? And yesterday, something that we observed yesterday, there was just not sales. The sales just dry, kind of like this market is just not high enough, right? It was too low. It's hard to grasp that, you know. Now, I am interested now in seeing if there is a test of this area here. This area here. Okay. This area here. Remember when I talk about those 65 puts, there were 0.85 points. Guess how much are those now? And that was when the market was up here. Before, as the market was closing the gap. Guess how much are they now? 0.85. They have changed nothing. Look at this. It's still 0.85. They have changed nothing. Now that is those were September options. Now today, I remember those were, I guess, was 10 points, something like that. 65, 60. Come on, man! It doesn't have a beat. It doesn't have a beat. Oh, look at this. Look at this. Now check this. This is the danger of this market, right? You know, the market has break 10, 15 points. There's no gains. That's my way to do business, right? And look at these options. I don't have here the 65 for CME is not giving me that. I just have this in things, right? Starting next week, they're going to have every 5. But look at that, there's no bid here. So if I buy this, how much are you going to pay for this? There's no bid here. Nothing is just selling. there are. I mean, come on, man. These are the games that I play here. It's very risky, man. Very risky. If I come here and buy market, how much are you going to pay for that? 50? I don't know, because there is no bid. There's no bid. All right, there's no liquidity here. And if, who is going to sell this? All right, if the market just if right now, this 65, we are like how much points? Like 5 points away. There are 20, 30 points in value now, but they're still not in the money. It's still not in the money. This is just too risky, man. This is just that's the only thing that I can say. We were talking about risk in the long side, and at least for the way how I do business, it is just too risky also on the other side for me, because I don't trade straight options, straight futures. I don't do that. Oh boy. Please let me know if you have any questions here or comments. Do you have any comment here? I'm going to put this. I'm going to set this option board aside. I'm not interested in. All right, man. This is starting to make sense now. Notice where this volume is, right? It's in the upper side, in the upper side, in the upper side. Let's start. This it's very weird, thousands starting. What is this? 4 a.m. in the morning. It's a lot of volume here. It's very weird, man. Just that's the least I can say. All right. Unless you have any questions, I'm going to be calling it a day. It is 10:15 already. Not before wishing you have a wonderful rest of the day. Stay safe. Happy trading. Hope we can see you another day. Bye bye.